All right, so better than expected growth data today. The economy grew by 2.5% in the second quarter. That means we're out of a recession when we saw 2 consecutive quarters of contraction in the economy before that. But what does it mean for the rest of the year? Analysts saying no great shakes. We're still not going to grow very much, maybe not much more than 0.5%. And let's discuss. We're joined by Owen Nkomo from unconvinced Wealth. Great to have you with us.
Thank you so much.
So better than expected, at least.
Yeah, I mean, we're lucky to have hit the number, right? Because last time we missed this number by 2%. You know, when we're down 0.7%, and we're looking for a much higher number of 1.4% better on the GDP growth. So it's a big welcome relief to us.
We were talking about something. If you're on the street, you don't feel like, you know, the economy is in contraction in the first quarter of the year and then suddenly this jump in the second quarter of the year. Who actually feels that? Because it's quite a swing.
Mostly it's you and I, because we care about the numbers, right?
Yeah.
But people in the street out there, they're like, I mean, I'm still paying $12 for a taxi. I'm still paying $22 for, you know, for cooking oil. Price of bread hasn't gone up by $3. You know, they don't feel the difference,
so
right?
Different. Try and explain it for an ordinary person. What was so different in our economy?
I mean, some of the components that came through in the number and the GDP number right now, which once again, not everyone cares about, but are very important. They improved quite significantly from the last reading that we had. And I think, in my view, what's important is for us to be able to sustain the growth in these numbers to make sure that we can at least get to a minimum of 0.5% plus GDP growth at the end of the last quarter of this year. You know, I think that will be very important for us to realize that as a country. So that's why this week remains very important, Francis, because on Thursday we're going to be getting the mining, gold production, and you know, a few other indicative numbers in terms of the economy and how it's growing.
What does this mean for people who are playing in the market? So today we saw the rand strengthen, but the JSE still weighed by other things.
Yeah, look, I mean, it was really, the number was priced in. We were expecting the number to come in at this level. But I can guarantee you that if this number had come in negatively, we would have a different picture on the rand. The currency would have significantly weakened. The JSE would have closed significantly weaker than it did. Even if it did close negatively, you know, I mean, I think that the fact that we're going into a permanent recession, questions we're going to start getting asked about whether or not this is a permanent recession and how do we get out of it. So all the journalists who had written we're in permanent recession yesterday, they now have to restructure their headlines.
Yeah. And we often say the JSE is so decoupled from the real economy, but some stocks still linked to what happens here, to how many people are shopping, banking, etc.
Oh, definitely. I mean, your food stocks, your retailers, your bank stocks, your your insurance stocks. Obviously, all of those stocks, because they're very price sensitive towards the consumer markets and what's going on with the growth of the country. To an extent, the mining stocks as well would have been affected negatively, in my view, if we had a negative growth in the GDP.
The reshuffle, the cabinet reshuffle came at the end of March and everybody was alarmed, and we've seen business confidence figures being affected.
Yeah.
But is the doom and gloom overstated if we see a number like this?
I am convinced.
Remember, this is just after that cabinet reshuffle to the middle of the year.
I'm convinced that we are more negative about our economy than most of the people out there in the world are, because they're looking at the balance of scales, what's going on in the rest of the major markets relative to South Africa. You think there's political drama in our country? Look at the other major markets. Look at Venezuela. Continue to look at what's happening in Harare, for example. Look at what's happening in Nigeria. The president having been sick all these months. Look at what's going on in Kenya. You know, they've had to throw out the results of the last election. Those are big deals. Relatively speaking, we have our issues, but I do think we're different from the rest of our competitors.
So that's why the rand holding up in the face of all of this. So we're still attractive given the bad choices out there,
right?
Yeah.
Given the alternatives, we're still comparatively better off. I mean, the most important view, in my view, for investors now is what does Donald Trump and his friend in North Korea do with each other, you know, with all this show of power, etc. So what happens in South Africa by way of GDP is like us. after all, South Africa is like a $380 billion GDP country. We're talking about the bigger economies. You know, if anything goes wrong there are no problems. So our investments in South Africa, Taiwan, etc., and all the emerging markets, you know, they can take a back seat because there's bigger issues to worry about. That's why I believe we haven't been sold off. And the currency is quite firm. And I always say that the currency, in my view, is the equivalent of a share price of a country, which reflects that people are still confident that South Africa can get it right.
Okay, they haven't written us off. Let's look at some of the sectors. So Nomura released a note saying agriculture, especially farming, hugely contributed to this.
Yes.
Utilities, construction, finance, and taxes showed growth, which I'm surprised by. Taxes showing growth versus the previous quarter. But mining, manufacturing, and retail remained weak. And those are key sectors. We can't survive without mining, manufacturing, and retail. Yeah,
so look, I mean, key as they are, their contribution to the GDP number, I know it's not as big, right? Like mining used to be the thing 10, 15 years ago in the country, but it's continued to decline. You've got services now coming up. You've got agriculture, and you've got construction, and you've got a few other things that are now making a big difference to the GDP calculation. So as much as those numbers have come off, you've got more sectors that are becoming more important. IT, for example, is becoming more important in the country as well as services, like I've mentioned.
Final question for you. I hear what you're saying, that the rand, not too bad. Global investors still putting us in a certain category where we're investable in. However, 0.5% growth, dire for South Africans who are unemployed, for poor people concerned about inequality. Do you think that this could all be different if our politics was different, if there was less policy uncertainty, all those things that we complain about? Of course. Where could we be, and where should we be heading?
I think we probably could be at 3% in my view. The political uncertainty, the lack of policy implementation that is sustainable, the measurability of policy implementation, in my view, all of those things are very important. I mean, just look at our parliament. What happens in parliament? The guys are not discussing big policy issues. They are trying to get rid of the president. Is the country dependent on the president being in charge, or is the country dependent on the implementation of the long-term policies of the country? It's food for thought. You know, and I think that we could really do 3% in my view, with all these sectors that are starting to show a little bit of growth coming through. And if we could make sure that there's, you know, a certain level of political certainty and policy implementation, and opposition parties, they can see eye to eye on at least one thing. I don't believe that it's all that everything that's raised in parliament needs to be opposed, whether by the main party or by the opposition. I do think there are some elements that would take the country to the next level, but it just looks like the guys that are driving our policy implementation look forward to going to parliament just to oppose each other, and that's not going to get the country anywhere.
And that's going to harness the potential that's there, and we're desperate for growth. Thank you so much. Owen Nkomo from Nkunzi Wealth. And let's leave it there, especially focusing on growth tonight, but that is the end of Prime Biz. We'll be back with your general news headlines shortly.